Greetings to all. This is Neel Parekh, a technical research associate at GEPL Capitals. Welcome you to this weekly market outlook video. In this video, we are going to talk about the Nifty and Bank Nifty current market chart structure and what are the probable levels it could face in the near term. As well as with this, we'll discuss the two stocks which is a high potential to outperform the broader indices in the upcoming series. So without any further ado, let's start with the video. So this is the Nifty 50 weekly time frame charts. In this chart, we are observing Nifty has been showcasing a faster retracement, like the prior 3 week of decline has been just retraced in just 2 weeks consecutively and maintaining a higher bottoms formation on the weekly scale. That defines the faster retracement and showcasing a robust price structure on the broader basis. That means on the weekly structure is still on the positive front, but if we're zooming out on the daily structure on the today's trading session has witnessed a profit booking from its higher levels. As if we look at the India VIX, which is a volatility index, has witnessed the breakout of its 3 month concession zone and it's been closed at 13.42. That defines the heightened volatility would persist in the near term. So at the higher levels, the pressures would get at a level of 26,200, 26,300 zone, which is an all-time high area. From there, we will witness some sort of a selling pressures. But if we look at the broader structure, that seems to be intact on the positive front. As on the monthly scale as well, we have witnessed the breakout of its cup and handle pattern on the prior monthly session, and current month is being trading above the prior month's high. That defines the positive structure on the weekly as well as on the monthly scale. On the daily scale, if you look at the index has been traveling in the upward rising channel and it's been currently taking a pause near to its 5 day exponential moving average and it's approaching near to its 26,030 mark, which is a downward channel of the indicators. And at a higher levels, 26,250 would be the resistance zone on the immediate basis. And at the lower scale, 25,950, 25,900 would be a strong support zone for the near term. The momentum indicators, MACD, and the RSI indicators are indicating a positive momentum as of now. But the participants wise, if we look at the Nifty, out of 50, there are only few selective constituents participating in the rally. So most of the breadth is been showcasing a neutral sentiment. It's not indicating any kind of a robustness. So at a higher scale, the actionable setup for the Nifty index would be buy Nifty above the level of 26,100 for a target price of 26,250 level and 26,300 level. And in this case, we have to maintain the stop loss of 26,030, which is the sloping trend line which has been drawn on the blue mark. On the Bank Nifty front, if you look at on the weekly scale, the Bank Nifty also showcasing consistent high top, high bottom formation. And on the current week, Bank Nifty has witnessed the all-time high level, which is at the level of 59,440. So banking indexes and the names are indicating a leadership in the current market rally. So most of the private banks like HDFC Bank, ICICI Bank, Axis Bank, and on the PSU Bank side, SBI Bank is been contributing to the Bank Nifty rally on the higher side. On the daily scale, if you look at the Bank Nifty has witnessed a dip below the level of its 5 day exponential moving average. So some sort of a consolidation would there on the Bank Nifty index after hitting an all-time high. So at a lower scale, 58,400 to 58,000 level would be the strong support zones for the Bank Nifty index, and at a higher levels, 59,400 to 59,800 would be the resistance zone. So actionable setup for the Bank Nifty index would be buy Bank Nifty above the level of 59,000 level for the target price of 59,400 to 59,800 soon. And in this case, we have to maintain the stop loss at the level of 58,400 mark. Now, stock to watch out for the bullish momentum for the upcoming series. The first one would be Eicher Motor. So Eicher Motor on the weekly scale, if you look at, it's been witnessed the breakout of its flag and pole pattern, and it's been mean revision has witnessed at the level of 12-week exponential moving average. The volume participation has also increased in the Eicher Motor. It's been trading above its 20-day exponential move average, and on the daily scale, momentum indicator MACD has witnessed the bullish crossover. So it indicating contributing a positive undertone for the Eicher Motor Index. At a higher levels now, 7,650 to 7,800 is the upper targets of the Eicher Motor, and in this case, we have to maintain the SL of 6,825. Second stock to watch out for the bullish momentum for the upcoming series would be M&M. So both the stocks we have shortlisted from the auto index will also come to the Nifty auto index why it's been showcasing a prominent upward trend. So if you look at the M&M, it's been showcasing a gradual upward trend, maintaining high top, high bottom formation on weekly as well as on the daily scale. If you look at the statistical behavioral pattern which has been followed on the M&M, which is that every dip has been correct as every dip has been recovered after witnessing a 5% price-wise correction. 5 to 8% is a price-wise correction M&M has been witnessing. So recently, the 5% correction has been completed and M&M has been witnessing a high top, high bottom formation, resuming its primary upward trend. Under today's trading session, the M&M has witnessed the flag and pole pattern on the daily chart, and as well as the volume has surged above its 20-day exponential moving average. So collectively, if you look at the indicators are pointing toward the continuation of its primary upward trend. Current market prices is at 3,747. We can set a target at 3,850 to 3,950 level. And in this case, we have to maintain the stop loss at 3,600 mark. So if we look at the Nifty Auto Index, it's been verged on the breakout of its 1 year consolidation phase. So this is the monthly scale of the Nifty Auto Index. It's been on the verge of the breakout of its prior all-time high, which is at the level of which is at a level of 27,696. So weekly scale, if we look at the auto index has been forming a similar statistical behavioral pattern made after witnessing a bottom at April 2025. It has been continued its high top, high bottom formation. And during the bottom out formation, it has been corrected price wise of 5%. Recently, the 5% correction has been completed on the weekly scale, and now it's been poised to surge its primary upward trend, and it's been indicating it would index level, it would showcase a 7 to 15% rally on the index level. So Eicher Motor and M&M are the stocks we have shortlisted from the auto index. So that's it from my side. Hope you like the video. Do share and subscribe to GEPL Capital's YouTube channel, and we'll meet on the next week for much more such upcoming videos. Thank you.